Welcome back to the deep dive. This is where we, really try to cut through the noise and focus on the insights that actually make a difference. Today, we're going deep, not just scratching the surface. We're diving headfirst into a concept that is, genuinely powerful enough to reshape your whole financial outlook. This isn't about chasing the latest hot stock tip or trying to make a quick buck. No, this is about understanding the fundamental things, the actual building blocks that create real, lasting wealth. And freedom, and that rock solid security over the long haul. So let me just ask you this. When you think about getting rich, what pops into your head? Is it just pulling down a massive salary, maybe winning the lottery? Or is there something else? A more deliberate path, a strategic approach that the financially successful seem to get, but maybe isn't taught in schools? Okay, so let's unpack this. Our mission today, our deep dive, is focused on this core idea that folks who build enduring wealth, they have a fundamentally different focus compared to people who just, spend their lives working for money. We're pulling from our source material here, specifically digging into these 15 assets that can make you rich. And look, this isn't just about piling up cash in a bank account. It's really a masterclass in ownership. It's about building a future where your resources aren't just sitting there, they're actively working for you, compounding, growing, giving you more freedom. So think of this deep dive as your shortcut, your way to really grasp these foundational principles. Hopefully you'll have some aha moments, maybe get some genuinely actionable ideas you can use right away.
Yeah, and what's truly fascinating here, and the source material really hammers this home, is that difference between just, earning a paycheck and strategically building assets. It sounds simple, maybe just semantics, but it's a total mind shift, a paradigm change, really. These assets, they aren't just lines on a balance sheet or some abstract financial thing. They are quite literally the pillars you build a different kind of life on, a life with freedom from that constant financial worry, right? Security. The ability to make choices not just based on needing the next paycheck. The big theme running through all of this is ownership. And crucially, these assets, they all have this ability to self-multiply, to grow on their own. That's the key difference from liabilities, which, by definition, just drain your resources. Assets put money in your pocket. Liabilities take it out. Getting that fundamental difference, that's maybe the most critical first step toward real financial independence. Foundational, tangible, and financial assets.
Yes.
Building blocks of wealth.
Absolutely. Couldn't agree more. And when we talk about those foundational building blocks, especially the ones that have, really stood the test of time, we almost have to start with one of the biggest wealth creators ever. Real estate. I mean, for centuries, right? It's been this absolute champion of wealth building. And it makes sense, doesn't it? It's fundamental. The source says everybody needs a place to live, a place to work, a place to gather. It's basic. But here's where it gets really, really interesting, I think. When you own property, you're not just buying land and bricks. You're actually acquiring what the source calls an income machine. That phrase alone, income machine, just kind of reframes the whole thing, doesn't it?
It absolutely does. That framing is critical because it highlights how multifaceted real estate is as an asset. It's not just static, like burying gold bars, though it can appreciate, of course, but it's dynamic. Let's kind of break down how it makes money. First, there's the obvious one. Cash flow. Rental properties bringing in monthly income. Predictable, tangible returns. Then you've got things like long-term leases, maybe on commercial buildings. That secures stable income for years, sometimes decades. Incredible predictability for an owner. And then, sort of working in the background, is appreciation. Land, buildings, they tend to go up in value over time, often faster than inflation. That builds your equity quietly. A lot of millionaires actually point to property ownership as being that first big leap. They bought something, it grew significantly in value, and suddenly they had capital to do other things. Now, a really powerful angle the source stresses is leverage, basically borrowing money to buy the asset. And the beauty, especially with rentals, is your tenants can effectively be paying off that loan for you over time.
That just accelerates wealth building massively compared to just saving cash. Imagine, right, you buy a $500,000 property, maybe put $100,000 down. If that property goes up 10%, that's $50,000. But you only put in $100,000. That's a 50% return on your cash, not just 10% on the property value. That's leverage working for you. However, this is super important, often overlooked. Leverage cuts both ways. If values drop or you can't find tenants, you're still on the hook for that loan. Losses get amplified too. So the real insight isn't just use leverage, it's use responsible leverage. Know your market, have reserves, understand your own risk tolerance. And for you listening, getting these mechanics, cash flow, appreciation, careful leverage, it can totally shift how you see housing. From just an expense to a strategic wealth opportunity. Plus, don't forget things like depreciation for tax benefits. Many first-time landlords miss that, but it can seriously reduce your tax bill. It's like getting extra cash back from the government just for owning the asset. Huge.
That's a fantastic point about the tax side, and the whole responsible leverage piece really changes how you look at a house or apartment building. Okay, so from owning a piece of the physical world, let's shift. Let's talk about owning a piece of the global economy itself with stocks. So instead of a building, you own a tiny sliver, a share of a huge company. Apple, Tesla, Amazon, you name it. The appeal is pretty clear, right? When those companies innovate, grow, make more money, your piece gets more valuable, you kind of ride their wave, you get the benefit of their success without having to, run the company day to day. It's a different type of ownership, but incredibly powerful and accessible.
Yeah, exactly. With stocks, your wealth is basically tied to the company's success.
Right.
They expand, create new stuff, boost profits, your shares tend to go up. And the source material talks about the magic of compounding here. It sounds simple, but it's just incredibly powerful over time. Think of it like a snowball rolling downhill. Starts small, picks up more snow, gets bigger, then that bigger snowball picks up snow even faster. Your money does that with compounding. It earns returns, and then those returns start earning their own returns. Year after year, it accelerates. That's how serious wealth gets built long-term, even from modest starting points. And historically, stocks have, consistently outperformed inflation and most other investments, actually. So they protect your purchasing power. Plus, beyond just the share price going up, many companies pay dividends.
Ah, right, like a little bonus check.
Exactly. It's a share of the company's profits paid out to you, the owner. The source calls it a paycheck for being an owner, which I like. It's another income stream. And you can reinvest those dividends to buy more shares, which then boosts the compounding even more. It's a virtuous cycle. So for you listening, it's about seeing how owning pieces of thriving businesses supercharged by compounding offers really significant growth potential over the long run, making your money work hard for you.
Okay, so stocks are the growth engines, maybe a bit more exciting, sometimes volatile. Then we have bonds. They're kind of the steady, reliable friend in the portfolio. I gotta admit, bonds maybe don't sound as thrilling as like the next big tech IPO, but the source is really clear. They're a critical piece of the wealth puzzle. You really can't ignore them if you want a truly robust, resilient financial base. They have a specific job to do.
That's spot on, and it's a role people often misunderstand. A bond is basically you lending money, either to a government, federal, state, whatever, or to a corporation. In return, they promise to pay you regular interest and then give you your original money back when the bond matures.
Yeah.
The key difference from stocks is the risk in return. Generally, bond returns are lower than stocks, sure, but their stability is much, much higher. They don't swing up and down wildly like stocks can, especially when the market gets choppy.
So they kind of smooth out the ride.
Exactly. They're the steady, reliable friend, or like I sometimes say, the designated driver for your portfolio. Maybe not the most exciting, but they get you home safe. They provide balance, reduce overall risk. They act like ballast in a storm when the stock market is plunging. So for anyone building a serious portfolio, understanding how bonds bring diversification and risk management is just crucial. They stabilize things, preserve capital, provide predictable income during downturns. That's key for enduring wealth.
Right, okay. And speaking of smoothing things out and maybe not wanting to pick individual stocks, which, let's be honest, can feel like a full-time job, let's talk about index funds and ETFs, exchange-traded funds. Our source pitches these as a brilliant solution for people who don't have the time or maybe the deep expertise to pick the next winner. It seems like a really accessible, powerful way to get market exposure without needing to be a Wall Street analyst.
Totally. The concept is revolutionary in its simplicity, really. Instead of trying to guess which one company will soar and the odds aren't great, you invest in hundreds, sometimes thousands of companies all at once. The classic example, which the source mentions, is an S&P 500 index fund. You're not buying one company, you're buying a slice of the 500 biggest U.S. public companies.
So it's like owning a piece of the whole economy, basically.
Exactly. Like owning a slice of the entire economy. And it's instantly diversified. That diversification dramatically cuts the risk of any single company doing badly and tanking your investment. You're not betting on one horse, you're betting on the whole race. And historically, these funds have delivered consistent returns with minimal effort. They basically track the overall market, which, long-term, has done very well. Plus, they usually have super low fees compared to funds where managers are actively picking stocks. So they really democratize investing. Make it accessible, less scary for you, the listener, no matter how much you know about finance. You get to participate in the market's overall growth. Entrepreneurial and creative assets. Building your own engine.
Yeah, that definitely makes investing feel less like gambling and more like, well, participating, which is great. Okay, so moving away from those established financial things, let's talk about actively creating something new. Let's talk about businesses. This is where you really take the reins, not just owning a tiny piece, but controlling the whole engine. The source calls owning a business one of the fastest ways to create wealth. And you can see why, right? I mean, think Jeff Bezos. He didn't get that wealthy from a salary. He built Amazon. It's about building something that generates value, not just earning from someone else's thing.
That distinction is absolutely critical. It's the heart of the entrepreneurial mindset. Owning a business gives you control you just don't get as an employee. You control the cash flow, the growth strategy, ultimately your financial destiny, to a much larger degree. And the source makes a good point. It doesn't have to be Amazon. Even smaller businesses, like a well-run local coffee shop, or a niche online store, or a consultancy, they can become huge assets if built right, with good systems, clear vision, solving a real customer need.
So it's about scalability, too.
Exactly, scalability. Growing revenue without cost, growing just as fast. But maybe the most powerful part is the potential for passive income. Unlike a job where you trade hours for dollars, a well-systematized business can eventually run without you through systems, automation, a good team. That's how wealth really multiplies and gives you freedom. When the asset makes money, whether you're physically there working or not, it shifts your whole mindset from wage earner to value creator, building something bigger than yourself. The challenge, of course, is a lot of entrepreneurs accidentally build themselves into the job. The real wealth comes when the business runs without needing you there 24/7.
That's a key point, building the machine, not just being the busiest part of it. Okay, so maybe you're creative, but not necessarily wanting to build a traditional business. What about stuff born purely from your mind? That brings us to intellectual property, IP. This category is fascinating, how pure creativity can become wealth. The source gives great examples. A hit song, a bestseller book, a software patent, a unique logo. What really grabs me is that idea of income flowing long after the work is done. I mean, think about J.K. Rowling and Harry Potter. She wrote those books once. But the royalties, from books, movies, theme parks, merch, decades later, still pouring in. For her kids, it's incredible.
It really is. And the range of people who benefit is huge. Inventors, writers, musicians, artists, coders, photographers, anyone whose creative work can be protected and sold. IP is unique because you do the work once, but it can generate revenue almost indefinitely.
Low cost to replicate, right?
And the internet, as the source points out, has just supercharged this. Digital products, ebooks, courses, software, digital art, you can sell them globally with no inventory, no physical shipping.
Right, the scale is massive.
Immense scalability and global reach. It's inspiring, makes you think about your own creative spark. Is there something you know or can create that could be protected and generate income for years? It's a real pathway to financial independence, leveraging your unique talent.
Love that, leveraging your genius. And sticking with that online theme, building on the internet's power, we have digital assets. The source calls these modern-day real estate, which I think is a brilliant analogy. Captures that 24/7 earning potential perfectly. They work while you sleep.
Yeah, that modern real estate comparison works well because these assets, once you build them, can generate ongoing revenue streams, often passively. We're talking concrete things here, like high-traffic websites or blogs, popular YouTube channels, in-depth online courses, maybe podcasts, membership sites, digital downloads. These aren't just hobbies. They're structured assets designed to make money through various streams. Ad revenue, affiliate commissions where you recommend other products, direct product sales of your own stuff. And the real magic, again, is that global scalability. A physical shop closes, a website or YouTube channel is working 24/7, reaching people everywhere, across time zones.
With very little extra effort once it's set up, right?
Pretty much. The main investment is upfront your time, your knowledge to create the content. But then it can reach this huge audience. Unlike a physical business with its limits and overhead, it shows how these online platforms are incredibly powerful tools, democratizing wealth creation, letting you build passive income streams, reaching a worldwide audience. 3, alternative and human capital assets. Diverse pathways to prosperity.
It really is amazing how the digital world has blown open the doors for creating assets.
Okay, let's shift back to something more tangible, more traditional maybe, but still super relevant, especially when things feel uncertain economically. Precious metals, gold, silver, platinum, they're not just pretty shiny things. The source positions them clearly
as timeless stores of value. They've mattered for millennia.
Absolutely. Their historical role is just undeniable. For thousands of years, literally, people have turned to gold and silver as a safe haven during crises. Their value isn't tied to a government or a company. It's kind of intrinsic, based on scarcity and usefulness. They often act as a buffer, protecting purchasing power from inflation or currency devaluations. When paper money loses value or governments print tons of it, metals tend to hold their ground or even gain. They're like financial insurance, as the source puts it, something the wealthy often use to protect a portion of their wealth.
It's not necessarily for huge growth, but for protection. Primarily, yes. The main role isn't usually aggressive returns like stocks. It's stability, a hedge against economic chaos, preserving some wealth when other things might be shaky. For you listening, it's about understanding their role in diversification, having some tangible assets as protection against the unknown. Balance.
Got it. Balance is key. Okay, next up, an asset class where passion and potential profit can really meet. Collectibles and art. We're talking rare paintings, vintage cars, fine wines, maybe even things like rare comic books or stamps. The source highlights their potential for massive appreciation. It's where deep interest can become real wealth.
Yeah, this category is fun because it is where passion meets investment strategy. The source uses that Picasso example bought for thousands, potentially worth millions later, shows the upside. However, and this is the big, but the source stresses this asset class absolutely requires expertise.
Deep knowledge. So it's not like buying an index fund.
Not at all. This is active. You need that right eye. Not every old painting or vintage car goes up in value. Far from it. You need to understand the market, the history, authenticity, provenance, who owned it before, future trends. Without that deep dive, it's basically speculating, not investing. Plus, you've got risks like illiquidity, hard to sell quickly, fakes, damage. So for you, the listener, yes, passion projects can become valuable assets, but tread carefully. Deep research and genuine expertise in your niche are absolutely essential. You got to become the expert.
That's a really important warning. Passion is great, but expertise makes it an investment. Okay, total change of pace now. Let's talk about something very modern, maybe a bit controversial, definitely attention-grabbing. Cryptocurrencies. The source acknowledges crypto, this new wave. Decentralized assets challenging the old financial system. It's made headlines, fortunes, and also caused some major losses.
Yeah, the source definitely addresses crypto's impact, and it acknowledges the obvious volatility. That's the first thing everyone needs to understand. Big swings. But beyond the price roller coaster, it focuses on the massive opportunity. And importantly, it broadens the view beyond just Bitcoin or Ethereum. It talks about how the underlying blockchain technology itself is reshaping industries. That's the bigger picture.
So it's more than just digital coins.
Much more. It's about how blockchain changes how we store data, handle transactions, establish trust without needing a bank or middleman. Think about like supply chains using blockchain to track goods transparently, fighting counterfeits, or smart contracts automatically executing agreements, or decentralized finance DeFi offering bank-like services globally. The source notes that while it's risky, those who understand and diversifying crypto can see life-changing gains. So it's about a balanced view, not blind faith, not total dismissal. Research the tech, understand the specific project, manage the risk, maybe allocate a small speculative portion of your portfolio if it fits your goals and risk tolerance. See it as a potential high-growth, high-risk play.
Okay, that perspective on the underlying tech is really helpful. Good. Now let's pull back from external things, stocks, crypto, real estate, and focus inward on you. Because the next asset is deeply personal, incredibly powerful, and totally yours. Skills? The source says it plainly. Your skills are assets that nobody can take from you. And that just rings true, doesn't it? Unlike a stock you can sell or a house that could burn down, your abilities, they're always with you.
It's a fundamental shift, thinking of yourself as an appreciating asset. The source talks about high-income skills, things like coding, persuasive writing, digital marketing, sales, public speaking, complex problem solving, skills that have value anywhere, anytime, really, regardless of the economy or where you live. And what's unique about skills, unlike almost any other asset, is they appreciate with use.
Right. The more you do it, the better you get, the more valuable it is.
Exactly. The more you practice, hone your craft, solve problems with that skill, the more valuable you become in the marketplace. And in a world changing this fast, developing skills lets you adapt, stay relevant, keep boosting your earning power. It's also about combining skills, right? Like, if you can code and communicate well, you're not just a coder, you're a potential team lead, manager, founder. The value multiplies. So for you listening, it's seeing self-improvement, learning new things, not just as personal growth, but as a direct investment in your earning power, your personal money-making machine.
Love that idea of combining skills for multiplied value. And building on those skills, letting the world know about them, brings us to personal brand. You know, in our super connected world, your reputation is basically currency. The source talks about how a strong, authentic personal brand attracts opportunities, partnerships, income streams you wouldn't get otherwise. It's not just for celebrities anymore. It's crucial for entrepreneurs, freelancers, even employees wanting to advance.
Absolutely. Your personal brand is this powerful, compounding asset built on trust and credibility. Think about influencers who monetize their knowledge, or thought leaders whose insights shape industries, or founders whose name alone attracts talent and investment. That's personal brand at work. It's built by consistently delivering value, sharing your unique viewpoint, being authentic. And the source says it compounds. More trust leads to bigger opportunities. It snowballs.
So it's not about being fake, but about showing up consistently.
Exactly. It's strategic reputation building based on real substance and integrity, not just hype. When you intentionally build that brand, you become a magnet for the right kind of attention, clients, collaborators, jobs. It's recognizing the power of your own voice and expertise and leveraging it, turning your reputation into a tangible asset.
Makes total sense. Reputation as an asset.
Okay, closely linked to skills and brand, really the foundation for both is knowledge and education. And the source is clear. This isn't just about fancy degrees, it's about ongoing self-education. That constant hunger to learn through books, courses, mentors, real-world trial and error, a lifelong journey.
Precisely. And the source uses Warren Buffett as the prime example. The guy's one of the richest people ever, and he famously spends hours every single day just reading and learning.
He sees it as an investment, right?
Totally. Because knowledge multiplies your ability to create wealth. It's simple. More knowledge leads to better decisions, period. It helps you spot opportunities others miss, understand complex situations, navigate problems more effectively. It's not just about collecting facts. It's about developing wisdom, critical thinking, seeing the bigger picture. So for you listening, it reinforces that investing in your own learning, your own intellect, whether it's reading, taking a course, finding a mentor, pays dividends way beyond the cost, financially and just in life. It's the ultimate leverage for your mind, the ultimate leverage. I like that. Okay, so we've talked a lot about individual assets, personal growth, but let's be real. Nobody builds significant wealth totally alone in a cave. Which brings us to our next asset, networks and relationships. The source calls this out as often overlooked, maybe because it's hard to put a dollar value on it immediately, but it argues it's one of your greatest assets. Wealth isn't built alone.
Yeah, this one is crucial. It highlights that wealth creation is often collaborative, relational. The power of your network is really about access. The right connections can open doors to deals, investments, insights, opportunities you'd literally never even hear about otherwise. The source says a single conversation with the right person can change your financial future. And that can absolutely happen.
It's not just who you know, though, right? It's the quality.
Exactly. It's not just collecting contacts. It's about the quality of those relationships.
Yes.
Mutual value, trust. And like a brand, relationships compound. When you genuinely help others, share your knowledge, foster connections, you build trust. And that trust creates reciprocal opportunities down the line. It's a give and take. So for you, the listener, it means being intentional about building your community. Peers, mentors, collaborators, moving beyond just networking to building real connections, and a core part of the wealth equation.
Such a vital reminder, wealth really is a team sport. Okay, we've reached the final asset, and it's one the source says most people overlook, but it's the most valuable. And that asset is simply time, the ultimate non-renewable resource. Finite. We all get the same 24 hours. Once it's gone forever. Such a simple truth, but so easy to forget in the daily grind.
This might be the most fundamental asset of all, because it's a resource you use to acquire and grow all the others. How you choose to use your time, where you invest it, that directly shapes your wealth path. Your whole life path, really. The source draws a sharp contrast. The wealthy tend to invest their time strategically, building skills, growing businesses, nurturing networks, acquiring assets that will work for them later. On the flip side, if time is just wasted on things that don't contribute to growth or assets, that's a lost opportunity forever, a real cost.
So it's about shifting from spending time to investing time.
Precisely. The ultimate goal is to build a future where time works for you instead of against you, where your assets generate income, freeing up your time instead of you constantly trading your limited time for money. It means consciously putting your time into activities that build future value and leverage. That ultimately buys you back more time for what truly matters. For you listening, it's a powerful final thought. Manage this irreplaceable resource like the ultimate asset it is. Be intentional.
Every hour is either an investment in freedom or just consumption. Climax reflection.
Wow. Okay, so 15 assets. We've covered a lot of ground, from tangible stuff like real estate to completely intangible things like time itself, stocks, digital assets, skills, networks, quite a range. But what's the common thread? What's the single core truth that ties all these different paths together? Our source material really distills it down to one crystal clear insight. Getting rich isn't about luck, it's about ownership.
That really is it. That's the fundamental dividing line. The sword hits it hard. The middle class spends money on liabilities, things that lose value, that take money out of their pockets. The wealthy put their money into assets, things that grow, appreciate, and actively pay them back. And if you look back at all 15 assets through that lens, it holds true. Owning stock is owning part of a company. Owning IP is owning your creation. Owning a business is owning the system. Owning digital space, owning your skills, even owning how you invest your time. Every single one, in its own way, is about ownership and growth. Acquiring things that appreciate, generate income, or boost your capacity to do so, instead of just spending on things that disappear or depreciate, leaving you stuck. So what's the takeaway for you personally? It's about consciously shifting your financial focus from consumption to creation, from borrowing to owning. It's a mindset change, prioritizing that long-term growth and freedom over just, the immediate shiny object.
That is a really powerful frame to end on, ownership. Which leads right into a direct question for you, our listener, as you process all this. So let me ask you, what asset are you going to intentionally start building or maybe strengthening starting today or this week? Is it finally digging into learning that high income skill? Starting to consciously build your personal brand online, maybe researching your first small real estate investment. And please remember, you don't need to do all 15 at once. That's just overwhelming, right? Leads to doing nothing. Just pick one. Start small. Take one concrete step. Build from there. That journey to freedom, it starts with that single asset, that single step.
And maybe one final thought to leave you with, building on that idea of starting. Don't just think about building one asset in isolation. Consider how combining even just a few of these assets can create this amazing synergy, like way more powerful than each one on its own. Think about it. Maybe investing in knowledge helps you develop skills. Those skills help you build a personal brand. That brand opens doors to digital assets or even starting a business, which then throws off income to invest in stocks or real estate. See how they layer? It creates this powerful feedback loop, this web. It can multiply your path to freedom in really cool, unexpected ways. It's not just additive, it's exponential.
Exactly. Building a web of wealth, not just one single thread. Fantastic point. Well, thank you so much for joining us on this deep dive into the 15 assets for true wealth and freedom. We really hope you continue exploring these ideas and, more importantly, start applying what you've learned. We'll catch you next time.